Hey, what's going on, everybody? Millennial Trader here from the Millennial Trader group on YouTube. Today's going to be our first video talking about crypto, and more specifically, we're going to talk about Bitcoin and Ethereum and two meme coins, DOGE and PEPE coin. And I'll give you kind of my thoughts and analysis as what I'm seeing in the market relative to kind of what people are talking about on other channels or other platforms. I've been a technical analysis trader, trading both stocks and crypto for the last 5 years. Over time, I'll kind of explain in detail some of the indicators and institutional grade models that I use when I'm developing a game plan and whether I'm entering or exiting a position, and my thoughts and analysis as to why I'm putting on or taking profit at certain points in time. All right, today is November 25th, 2024, and let's get into it. I'm going to put up my first chart here. So I use a platform called Symbolic. It's a subscription-based platform that was developed by a veteran on Wall Street. I won't go too much into detail, but he's advised some of the biggest hedge funds and institutions over the past 40 years. Some of the models that I use, he developed 40 plus years ago. And what's amazing is that these indicators can be used in any time frame, in any market, whether that's commodities, crypto, bonds, stocks, you name it. And over that 40-year time span, there has been minimal tweaking to the way in which the indicators have been developed. So I kind of like it because of how informative and how useful they are in identifying turns in the market. It's essentially a momentum and trend indicator. And again, I'm not going to go too far into detail about explaining it, but I'll I'll put it on and explain certain aspects of it as I'm considering things in the market. The other indicator that I use is Ichimoku clouds. It's a Far East Asian indicator that's was used back in Japan during, I guess, the early samurai um, dynasty in terms of trading certain commodities and agriculture back then. And again, it's the interpretation of price in relation to those five lines that the model uses as moving averages and certain other factors as well. And then, as you can see here towards the bottom of my screen, I use MACD. I like it because it's, again, a momentum indicator, and it helps me analyze certain things on longer term time frames. And generally speaking, I tend to look at trades over several days and weeks. I find, well, I guess just based on my own understanding of the market and kind of how I trade, I generally like to look at those time frames as opposed to more shorter term time frames, because you have to be more active in the way in which you manage your positions. So with that, let's go with Bitcoin right now. So obviously we can see that clearly Bitcoin has been in what seemed like a forever consolidation for the better part of 9 months. And then obviously as Donald Trump became president-elect, that's just where you see this explosion in the price of Bitcoin. And so, one of the questions that I always ask people is, how do you identify whether price at any given point in time is high or low? And so when I and I always get different answers about, stocks always go up, so over time whatever price you buy at, ultimately you will end up selling at a higher price. And that may be true, but it doesn't necessarily happen all the time for any particular stock. So, you know, Tom DeMark developed an objective indicator that allows you to identify turning points in the market after certain trends and momentum has taken place, and certainly, of course, whether there are exhaustion signals as well. So I kind of like that indicator for those particular reasons, because it'll allow me to determine whether I want to continue to press my bets or average cost over time, or whether I need to get out of the stock because something else within the market is taking shape that leads me to I guess realize that now is kind of the time to exit because something bad may be on the horizon. So one of them is called sequential, and it's a numbering system. The first part is called the setup, and it's a series of counts from 1 to 9. And then the second part is the countdown phase, which is a momentum indicator, and that can ultimately reach to a count of 13. And so usually turning points or areas of consolidation or pause generally happen around those time frames, where it's 9 being the close is higher than the price 4 bars prior. And so again, that is a momentum indicator. And then of course, as price continues, it'll go into a secondary count, ultimately leading to a 13, which at that point suggests there may be complete exhaustion in the market, where it's going to need to take time to consolidate, or that may be further indications of a turn in the market, in which case you may want to be looking in the opposite direction. So currently for this week, we can obviously see two interesting numbers. We see a 9 and a 13, which suggests to me that it wouldn't be surprising if Bitcoin consolidates for a little while before it gathers enough strength to push beyond 100,000 psychological. But in the meantime, for me to want to put on new exposure at these levels, I'd be a little bit hesitant, because the way that the model was developed is that it's a really bad time to be putting on a new position, because you're at higher risk of a potential drawdown. And obviously, as of last week, we've slightly come back down, currently trading at around $94,000. But at the same time, it's still currently in the process of developing its own 13. So, like I said, there could be a potential pause in the market for a few weeks before it ultimately continues its advance towards 100,000. But for me personally, I don't think I'd want to be putting on any additional exposure at these levels. I'm going to put on a separate indicator just called propulsion, and it's essentially a complementary indicator developed by Tom DeMark, which measures the thrust of the market of trends in a certain direction. So ultimately, this teal line up here is an area where I could see price ultimately stall, and potentially be the area at which price reverses. But right now there's enough bullish momentum in the market that I don't foresee there being any significant headwinds to prevent Bitcoin to reach 100,000 or 107,000, which this objective measure suggests. If I was going to be in an area to want to add Bitcoin exposure, I'd want to put it somewhere in and around this purple dashed line of about $86,000. And again, over time, I'll kind of explain uh, my thoughts and analysis of what these indicators mean. But this is an area where, in a bullish trend, you likely want to lean into for um, for potential continuation to the upside. And depending on how price breaches or stays above this level, will then indicate to me whether there is going to be continuation, or we need to start looking in the opposite direction and potentially start to short Bitcoin. But for now, there's, like I said, there's enough momentum in the market that uh, this area here between 90, you know, 90 and 95,000 could potentially be an area of consolidation, and just price takes a breather and kind of just settles in before ultimately I'd like higher. So for me, I'm bullish Bitcoin, but I'm not going to be putting on any further exposure until we get price trades back at around 86,475. What's also interesting is the fact that MACD is incredibly bullish. The momentum is still significant, and we see that um, the amount of divergence between the two lines is healthy to continue for that bullish momentum. Let's move over to Bitcoin relative to Ethereum. So again, similarly, I have the sequential indicator and propulsion lined up. Um, Obviously, we can see that we are on the cusp of completing a plus 13 countdown. So to me, that may indicate a potential pause, or from a relative strength point of view, where Ethereum may start to outperform Bitcoin. And logically, it may make sense. It kind of makes sense because for Bitcoin to continue its rapid acceleration to the upside, it has to make significant dollar moves up. And when you're trading at close to $100,000, $10,000 plus moves aren't um, the norm. So, a smaller amount of dollar volume can push Ethereum up faster and higher than, let's say, the same dollar amount going into Bitcoin. But at these, but obviously we can see for the past since about mid June, that's when Bitcoin went on this explosive outperformance relative to Ethereum. And again, similarly, do I want to necessarily put on additional exposure to Bitcoin? As I mentioned in the previous chart, not right now. And obviously, we can see right now that Bitcoin is kind of underperforming Ethereum on a relative term basis, where as price goes up, that means Bitcoin is increasing at a faster rate than Ethereum. And this is really the first candle since this last 9 and 13 where I'm starting to question whether I want to be in Bitcoin versus being in Ethereum. So those are kind of my thoughts. Me, from a risk reward point of view, I'd probably want to be adding exposure to Ethereum. But that's just me. And when I put on the Ichimoku clouds, again, I'm not going to go too much into detail to explain what these 5 lines mean, but the first 2 are essentially moving averages. One is based on the midpoint of the previous 9 trading days, and the bottom one down here is based on 26. The blue one is current price projected 26 periods in the past, so this is 26 weeks in the past. And then the green and the blue cloud area are derivatives of these moving averages projected into the future. So again, logically, we can see that Bitcoin relative to Ethereum has traded above this conversion line since July, which is good. Any kind of pullbacks that have happened, they've kind of been in and around this first conversion line. So again, for me, I probably want to see how the next few days shape up, whether price pushes below the conversion line, which would be the first sign in a long time that we may end up having to retest this baseline down here. Um, so again, we can see that MACD is also starting to slowly go down. So the momentum is starting to fade, but it's still in a positive direction. So for me, I don't necessarily want to be putting on Bitcoin exposure right now, and I probably want to be looking at Ethereum um, for relative outperformance. All right, moving on to Doge. So again, similarly to Bitcoin, we're at the area of a potential um, market top, especially because I'm looking at this on a weekly time frame. Over the past 9 weeks, Doge has just gone on an amazing run, and congrats to anybody who bought Doge under 10 cents because you quadrupled your money. Um, do I necessarily want to be putting on exposure right now? Not really, and I say that because if we look at this candle right here on the weekly time frame, I can obviously we can see that there is some profit taking, some selling happening this week, but I'm not. There's enough momentum in the market to suggest to me that things are still looking okay. Um, but at the same time, any any kind of new exposure, you're kind of risking for potential drawdown versus continuation to the upside. And at the moment, I don't necessarily see any targets um, on the weekly time frame that I'd be um, favorably looking for Bitcoin, for Doge to continue to move to the upside. If I was still bullish Doge, I'd definitely probably want to be putting on exposure here in and around 30 cents. Um, because that's probably the better risk reward if we were to continue to see bullish momentum. And right now, MACD is suggesting that we have good bullish momentum in the market. That's probably the area that I want to lean into. Um, but I'm not really going to be adding exposure here right now. Putting on Ichimoku Cloud, yeah, like we can see just how far current price is relative to the baseline and conversion line. So you're when you're thinking about speculative bets or whether you want to be long something at at the current price level, I think you're just asking for some kind of drawdown. And I don't necessarily want to be in a position to instantly be negative. So I'd probably just wait over the next couple of weeks to see how price reacts, especially as we get into the inauguration of President-elect Donald Trump. So we'll see how things go. But if you're long the stock, great. Continue to hold. But any any areas where you want to kind of reload your positions, I'd probably be looking at that 30 cent price target. And then looking historically, yeah, I mean, psychologically, I could make the case that we get to 45 cents and kind of retest last week's high. And then, assuming that we can hold that level, then realistically, um, the last area that of potential resistance is the last all-time high. but I don't necessarily think we get there in one shot. I think it takes some time to get there. All right. Last but not least, Pepe Coin. So I was talking to somebody earlier this week, and they were like, "Hey, you should check out Pepe Coin." And I'm like, "Yeah, you know what? Pepe Coin had a massive run. You had hundreds of percent in gains had you just bought at the beginning of this month. So congrats to anybody who bought um, early November because you're sitting on a significant amount of gains. So well done. But I'm looking at this right now, and again, we can see that recently Pepe Coin topped out at a +9. We're working towards a potential 13 on using sequential, and I've got another indicator, a sister model to sequential called Combo, and it's essentially the similar kind of momentum and trending indicator. The count is slightly different in the way that this indicator was designed, but they effectively measure the same thing. Um, so again, right now we're heading towards a -9 count in the opposite direction. So it wouldn't surprise me if Pepe Coin comes down all the way to 17,667 before we potentially get a bounce and see how price reacts at that point. Interestingly enough, on the daily time frame, we see MACD having crossed over into a bearish momentum. So we'll see how significant and how prolonged that lasts. But obviously, um, you know, earlier in November, had you just taken a look at this bullish crossover, that would have been a good signal to at least start to look at getting long. And obviously this demarks sequential timing indicator, again, just added additional clarity as to reasons why you want to be long the coin back here. So that's it. Currently, I like Bitcoin, but do I really want to be in it right now? Adding new exposure? No, I'd probably be looking at Ethereum just for relative outperformance. Doge, I don't necessarily trade Doge from time to time, but I don't have any exposure right now. And Pepe Coin, I'm not really into. I'm not really looking at getting into a position after having run up huge. So right now, that's kind of, those are my thoughts right now in terms of these four charts. In a couple of days, I'll go through a live example of trades that I'm currently considering, and what would make me want to put on exposure to certain coins. But that's it for now. If you like this video, subscribe. I'll be putting out videos on a regular basis, at least weekly. This is the first video of our channel, so any comments or any coins that you want to see going forward, comment below, let me know, and I'll do my best to kind of explain over time what these indicators are and how I use them. But that's it for now, and we'll see you on the next one.